Good evening, everyone. Time for another silver update. I'm going to apologize ahead of time because it's going to be a long one. I have so much to cover with so many things that have happened. So, for those of you who don't want to listen to all of it, you might want to skip ahead to the end, or I'm not really sure. So, anyway, we have got just an absolutely crazy day in silver going on. We had another huge percentage drop, 10+% drop in the price of paper silver. Corrected back down to our March highs. Remember, these were new highs when we made them back March 7th or so. So we haven't given back that much, but this type of sell-off is something that a lot of the new investors in silver haven't seen before. Those of us who have been around quite a while have seen this type of thing before. I wanted to point out that at negative 2.5, the MACD is now more oversold by a wide margin than any time in the last year and a half. So we need to back out to the daily, actually. And this is going to come down. It's just barely positive now, but as the days go by, regardless of whether this goes up or down, this is going to adjust itself. So it's going to follow down here, and we're looking at rival points of the beginning of the year. If you remember when the year started, we have a pretty big sell-off. A lot of people got scared back then. If you remember, I told you my last buy point was here at 25. That's when I picked up one of the coins that I liked were the Tigers, and we're going to look at some of the coins now in a bit. But at 25, they were selling for 30, so I saw this rally and pretty big break and pulled the trigger there. I did pull the trigger today, and I put out a shout out on that on my channel. I did buy just a small amount of the Fijis. I like those. I'll show you those off of Gainesville. But I wanted to get back to the topic here. The MACD is going to be reset and be very low, and I suspect it's going to breach this point and this point. And if that's the case, then we're looking at the 850 low as the last time we had a sell-off, which is really good to have silver reset back to the worst sell-off it's ever had. Remember, I pointed out that this one was a 60-something% drop, and that was a real hairy one for a lot of people to ride out. People in the physical did okay, and at this point in time, I had not diversified into other mints. I was primarily in the Silver Eagles. I did watch the Silver Eagles, and the eBay cost and the other costs, it was something like this. That was roughly the bottom. Never actually did this. I did pull the trigger a number of times. Here, 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 here. I mean, I bought a ton of silver at this point, but we never really did see any of these prices on the physical. You never, as far as I know, I never saw physical silver under $10 this entire time. But be that as it may, I wanted to jump over real quick to, well, I've just got so much to cover. I wanted to jump over to the coins themselves. And this is the Grizzly that I've been recommending. Now, you can still go to Tolving and pick these up. If you'll note, they are shipping the week of the 16th. And we're talking $4, and that's above this spot that he quotes, which is 35. So 39 bucks, a little bit less than 39 bucks, and Tolving is free shipping on everything because he has such high minimums. So you can get yourself a box of these Grizzlies for 38 bucks. Just a fantastic buy. I mean, you can lock in you could turn around and sell them tomorrow and lock in a $15 profit per coin. So here they are on eBay, and you can see this is after the drop. These are live prices. This is, this afternoon. Here's one that sold for 58 bucks. And we go a little bit further back. Here's someone who wants a buy now for 59. They haven't taken it, but this is one of those coins that, in my opinion, it's going to hold up. I don't think it's going to be touched by whatever paper shenanigans they come up with. So I wanted to check my Tigers because that was one that I bought in the last dip, I told you, I bought at the 25 dip, and they were 30. So we got those, and we did pick up some of these half ounces. You can see the half ounces are $34.50 plus $2.50 shipping. But that was yesterday. So, but here's one that went today, $56. So I wanted to talk about the reason for this. One of the reasons you want to use these types of collectible coins is that, yes, when silver does eventually go to 500 to 1,000 to 5,000, whatever it goes to, some ridiculous price, you're not going to see the return you will with average rounds, because you can pick the rounds up a few bucks cheaper. But what these coins do is, by the nature of their rarity and their illiquidity, and a real important point about physical silver is its illiquidity. These types of moves don't get me to panic and run around and try to find stashes of eagles and other things so I can run to the coin store and sell them, because I'm not going to do that. For one thing, it's logistically difficult. It's also, when you're talking about the rare ones, it's even more so with the coin stores. They don't know what they're worth. You got to set up an eBay account. You got to do all this kind of crazy stuff. So the point is that you want something that's illiquid. You want something that's rare, beautiful, illiquid, and a coin from a mint with a dollar sign on it. All these things. This is what you want, because you don't want to sell them. You don't want to be shaken out of your physical silver when they pull stunts like this, because this is what they do. Silver is the key. Now, I know a lot of people don't believe that. A lot of people believe it's the precious metals, and I wanted to walk you through this real time so you'll understand. I've told people, first of all, I started telling people right here, this point right here marks the Bear Stearns collapse. The Bear Stearns collapse was the beginning of the financial collapse. The financial collapse began roughly in the summer. It coincided with this drop here. So silver was the key. Silver was what almost the silver shorts bankrupted Bear Stearns. They had to be subsumed under JP Morgan. They had a over the weekend meeting with the Fed to have them arrange to have certain banks take over their assets and, of course, take over their shorts. So I've been telling people for years that silver is actually the key to the entire financial system. And the conspiracy against silver is the key to the entire financial system. Now, those of you who are with me, who are new and who weren't around at this time, you've seen the same thing happen. Let's go back and remind you of what actually occurred, because you're a witness to it. If you remember, on this night, you had a gap up in Asia. Okay, if you remember, this weekend was a holiday weekend, and actually I think I may be confusing that weekend with this weekend, so correct me if I'm wrong. But we had a holiday weekend where they gapped it up and it nearly hit $50, and actually I think it was this weekend. So we gapped up on a holiday where Asia couldn't trade. The only thing that could trade were the Globex markets, and they pulled out all the stops on this weekend, and we had the simultaneous disclosure of the birth certificate, we had a royal wedding, and then we had the capture and death of bin Laden. So pretty much the controllers, if you want to use that term, pulled out all the stops. And why? To stop what? To stop this. To stop silver. That's why. Silver's the key. Again, you saw this in real time. This drop happened before the gold drop did. So let's overlay these, so because you probably don't remember. If we overlay these, I can show you that the attack came against silver first. Silver was attacked. Now look where we are. We're at a catastrophic collapse in the price of silver, and all of a sudden all the commodities are following it. So let's take a look at those. I have a screenshot from this morning because I figured that there would be a gigantic bounce, and there was. So let me grab the shot that I pulled, and we had, this is what the futures look like this morning. So you can see this is across the board carnage in everything. The only thing that was up was the US dollar, lumber, and the Japanese yen, and a little T-bond and 10-year note. Otherwise, the entire commodity complex was just absolutely destroyed, all at the same time. So what started with silver ended with everything else. This is the same pattern that you saw in the Bear Stearns collapse. It's happening again. Now, is it happening this time? I don't think it is happening this time. I told you before, if you saw a drop like this, something like down to around 22 roughly or so, about there, you will see a financial collapse. You will see the same thing you saw in 2008, and they may shutter the banks this time. We don't know. And I wanted to use that to segue into my next topic. Like I said, I have a ton of topics to cover, but I wanted to cover the topic of our option buddy here. And our option buddy, who was in the July 25 put, if you remember, it was 8 and 9 cents. You can see he's almost made tenfold on his money. There's still 120,000 contracts outstanding. He's almost made tenfold on his money. I can just about guarantee you this contract's going to go out worthless, because I don't think we're going to get to 25. But maybe I'm wrong. But anyway, I wanted to use this to address the next point I'm looking at, and that is, so this guy made tenfold on his money. Let's say he bet $1 million. Okay, he's got 10 million. Okay, you got $10 million. What are you going to do with it? What are you going to buy with your $10 million? I'd go buy some silver. Unfortunately, it's almost all gone. So let's look at what happened with this. First of all, we want to look at the SLV. Remember, we've been following the volume numbers, and the SLV is now at today's volume 300 million shares. So that's a record, even in this crazy increase. We topped it. Okay, so with 300 million shares and 200 million shares, okay, and another 200 million shares, that's 700. Here's 900. There, in this period from April 29th through the 5th, just 5 days, you've seen 1 billion shares of silver trade. You've seen and if you want to look at the chart of this, you could probably say that that was selling. So someone sold over this time frame 1 billion ounces of silver. Okay, well, let's just say they did. Okay, so they got between 48 and 34, so they got an average of, let's just say, 41. Okay, so they got $41 billion in cash. They've raised it. It's not even questioning where did they get 1 billion ounces of silver to sell, because it doesn't exist. But let's say they did. Okay, now they got $41 billion. Where are they going to put that? You see, it's a game. And the same game is visible on the COMEX chart. You've got this thing trading upwards of 80 on the spikes. Here's 75,000 contracts. 75,000 contracts. Again and again and again. Hundreds of thousands of contracts. That's times 5,000 ounces of silver. That's hundreds of millions of ounces of silver trading hands every day. Hundreds of millions. Well, it's not silver. There's not that much silver. This paper. The people are buying and selling pieces of paper. One piece of paper says, I own silver. Another piece of paper says, I owe silver. It's a gigantic fraud. None of this stuff exists. It's one gigantic fraud, and it's all going to come apart. And when it comes apart, all of the paper obligations are going to be zero. They're going to be wiped out to nothing, to complete zero. That's what they're going to. That's what the value of paper is going to. It's going to zero. So the question is, for all of these people, whether it's the guy who made $9 million profit on his puts, or the guys who made $41 million shorting silver, now what are you going to do? So it's a game, it's a trick, it's a fraud. I wanted to use that to segue into Jason Hommel, because he put out a really good article today, and it's called Silver's Dip Will Be Brief. I'm going to read this to you. Jason Hommel, I don't know if many of you follow him, but he is a stalwart. He's been around since the beginning. He's been accumulating silver like I have since the 90s. So he's seen all their machinations, all their games come and go, all this stuff. So he is one of the guys that they're not going to shake out. He's seen every trick they have, every trick in the book. So let's read this article. Silver dipped below $36 an ounce this morning, down about 8% from yesterday and down about 27% from the high last week of about $49.50 per ounce. A troy ounce is about 10% heavier than the more common international ounce. Some people are saying this is like 1980 all over again, and that silver will now crash. Nothing could be further from the truth. The truth is that the amount of money they have printed up since 1980 is 10 times higher. So if you adjust for inflation, the peak price from 1980 should be more like $500 an ounce in today's dollars. The next key difference is that in 1980, interest rates, the amount paid on bonds, rose to over 20% per year. Today, interest rates are close to zero. Interest rates make holding bonds more attractive. The next thing is that the U.S. government money printing driven inflation is just beginning. It's not even remotely close to ending. The U.S. annual budget is about $3.8 trillion, and the government collects $2.2 trillion, leaving a gap of $1.6 trillion that is met by money printing, which makes the value of the dollar go down. $1.6 trillion of new money can also be expressed as 1,600 billion, or 16 million. For comparison's sake, new investment demand for silver last year was only 250 million ounces at, let's say, average of $35 an ounce, was just under $9 billion, or only 9,000 million. Silver is not in a bubble in terms of prices. The bubble in stocks in 1929 was caused by debt financing. The housing bubble in 2007 was caused by debt financing. You cannot borrow money to buy silver. Thus, silver is not in a bubble. Exceptions. Yes, you can borrow money to speculate in silver, but no silver is ever purchased at the time that you purchase futures or options on silver. And the futures market is known for having an overall open interest over 800 million ounces of silver, while less than 40 million ounces of silver are available for delivery. Yes, also certain private firms who have horrible reputations, in my opinion, will let you borrow money to buy silver, but you must keep the silver with them, and it's doubtful that they ever actually purchase the real silver either. In silver's case, the availability of debt and the use of leverage is used to prevent you, distract you, dissuade you from actually buying silver. This makes silver an anti-bubble, the opposite of a bubble. This article claims that silver was worth $1,218 in the ancient Roman world, and he gives a YouTube video, and I've got that as a favorite on mine, so watch that. It does the same analysis that I did on the denarius and the common dime. One article last week noted that 8 years of global silver supply changed hands last week. That video is also on my favorites. 8 years of global supply changed hands in a week. People, this isn't real silver that's changing hands. It's pieces of paper. You've got to understand that. This is not about what price the COMEX says silver is worth. This is about how much silver you can stack up before the entire paper financial system collapses and all of these people are left with nothing. That's what we're looking at. He could not calculate how much silver traded hands in the OTC over-the-counter markets that are unreported and unregulated, which are typically 20 times larger than the visible markets like the COMEX and the ETFs. That article shows that the amount of paper trading of silver has recently grown to perhaps 1,000 times larger than the real silver market. At last week's rate of about 1 year of global silver supply traded a day, with 250 trading days in a year, suggests 250 times as much paper silver trading than the real silver, but that's not counting as OTC markets. Again, with all the flurry of news articles on silver in the last month, nobody has mentioned the BIS report that I've highlighted for the past 1 to 2 years that shows that world banks have liabilities, that's debts, in other precious metals, mostly silver, of anywhere from $100 to $200 billion. And that was way back when silver was $20 an ounce. That's about 15 years of annual world production, with swings into and out of the banking system of 8 years of annual production less than 6 months. Thus, mostly all the silver in all major LBMA banks in the world is thus likely fake silver, all fraudulent paper silver. Nothing is real there. I would love to know how much real silver they have, as obviously they have at least some silver to function their fractional reserve silver banking that they do. Thus, if a bank holds your silver, I am 99% certain they don't have physical silver, and that you know nothing about the real fundamentals of the silver market. When you read that a commentator or analyst is long SLV, you can know for certain that that commentator knows almost nothing about the silver market. When debt is used to actually buy real silver, the extra buying would artificially push up the price. When banks actually owe silver that they neglected to actually purchase, their lack of buying artificially pushes down the price. Again, silver is the opposite of a bubble. People have not yet learned that silver is payment in full. Silver is not a promise to be paid. Owning a promise to be paid in silver is about as bad as owning paper dollars, the value of both of which has primarily and fundamentally only one way to go, which is down. Government is in a bubble. U.S. paper money is in a bubble. The U.S. bond market remains in a bubble. Somebody just posted to my Facebook, everybody's selling out. Soros is selling his gold, etc. No, the opposite is true. Nobody was ever in. The real fundamentals of silver show that less than 6% of 1% of paper money in the USA even bought any real physical silver last year. That means that silver buying would have to be 20 times more just to get to 1% of people buying silver. Silver is the opposite of a bubble. This dip will be brief. Silver at $200 an ounce is still a price dip compared to where the silver price is headed. Fantastic. I couldn't agree more with everything he said. He's dead on. This is a paper-driven, phony sell-off. The price near $50 was a real price. People were really paying that price for physical silver. As it's dropping, and although now we're rallying, the places like APMEX, the places like Tulving, the places like Gainesville, these places are running out of physical silver. If this price drop continues for enough weeks, you'll see no physical silver available at any of those. So lastly, I want to touch upon an article by on Zero Hedge, and Tyler's pointing out that it continues. Another 92,000 ounces in physical silver is withdrawn from COMEX despite the paper collapse. So silver is still pouring off of the COMEX. The COMEX, in my opinion, is approaching complete implosion. and it may or could very likely be shut down within the next few months from a force majeure or failure to deliver silver in the delivery months of June and July. So there's a strong possibility that we may see the COMEX shut down. At that point, the only silver market will be the physical silver market, and APMEX, Gainesville, eBay. That will be the only place to actually find the price of silver, because the COMEX will have been discredited and proven to be a fraud. So everything we're seeing right now is just confirmation of what we already know, that the powers that be are pulling out all the stops to stop silver. To do so, they're going to have to crash every financial market in the entire world, and if they do that, then they're going to bring about the catastrophe they're trying to avoid. So there's no way out for them. They're painted into a corner, and the only way out for you is physical silver. And we'll talk to you next time.